All right, so welcome to another deep dive.
Into the Market Edge report for November 2024.
Yeah, it's always an exciting time to get this report and sift through and find the nuggets of gold.
It is, yeah.
So let's just jump right in. I guess the big picture takeaway
Huge.
is that the S&P 500 just crossed 6,000.
It did.
Which is a new
all-time high.
All-time high.
Yes. Quite a milestone.
So that's pretty crazy.
It is.
And what's interesting too is it seems like the institutional investors are
they're really driving this rally.
Really driving this.
Their positions are up 23% this month.
Wow, 23%.
Which is incredible.
Yeah, that's a big bet.
It is.
So where is the smart money going?
Well, not surprisingly, tech is still king.
Still king?
Yeah, especially semiconductors.
Okay.
Everyone's really anticipating NVIDIA's Q3 earnings.
Yeah, they've been doing pretty well.
They have, yeah. They've been scoring a lot of big deals in AI and cloud computing.
Right.
So we'll see how that plays out.
What about AMD? How they've been doing?
AMD actually just reported a solid Q3, $6.8 billion in revenue, 50% gross margin.
Wow.
But they did issue a slightly more cautious outlook for Q4.
I see. So a little bit of caution creeping in there?
Yeah. Could be some concerns about, supply chain issues,
right?
Global demand, that kind of thing.
Okay. Yeah, makes sense.
But overall, I think the cloud computing trend is here to stay.
Yeah, it seems like it.
I mean, just look at the performance of AWS, Azure, Google Cloud.
Right.
They're all seeing robust growth and improving margins.
Yeah, it's pretty impressive.
So it's not just hype.
Right.
There's a real fundamental shift happening there.
So beyond the usual suspects, I guess, are there any sort of under-the-radar sectors
definitely
that are worth watching?
Space technology is absolutely booming.
Wait, really? Like space, outer space?
Yeah, I mean, companies like Rocket Lab and Planet Labs, they're capitalizing on the growing demand for satellite launches.
Oh, wow.
And Earth observation services. So it's like that sci-fi future.
Yeah, it's getting closer.
It's getting closer than we think.
It is.
Wow, that's incredible.
Yeah, and another sector to watch is renewable energy.
Okay, yeah, green energy is definitely having a moment.
Right, and it's being driven by several factors: global sustainability initiatives,
right,
government incentives, and the increasing demand for clean energy solutions.
Okay, so tech is still leading the way, but space tech and renewable energy are some definite ones to watch.
Definitely.
So let's talk about the economy overall. Is it really as strong as these record market highs would suggest?
Well, on the surface, the economic indicators look pretty good.
Okay.
Q3 GDP growth was 3.2%, exceeded expectations.
Really?
Inflation has moderated, 3.1%.
Okay.
Unemployment is stable at 3.8%.
Wow. So things are looking.
And consumer confidence is at a 10-month high.
Okay.
112.8 to be exact.
All right. So this seems like people are feeling...
They're feeling good about the future.
You're feeling good.
Yeah.
But there's always a but, right? There's always a but. Yeah. And the big but is the Federal Reserve.
Right. The Fed.
Yeah.
Always keeping us guessing.
Always, yeah. So the market is currently predicting a 67% chance of a rate cut in early 2025.
Okay.
However, the Fed is also continuing to reduce its balance sheet.
Right.
And their official statements are still pretty cautious.
So they're sending mixed signals.
Exactly.
Okay, well, that makes it a little tricky then to figure out what's going to happen.
He raises a big question. What does this mixed messaging really mean?
Right. So I guess we have to watch and see what the Fed does.
Yes.
All right. So to get a better idea of, how investors are interpreting all of this, let's follow the money trail and see where it's flowing.
Okay, let's do that.
So what are we seeing?
Well, we're seeing a lot of money flowing into tech and healthcare.
Okay, those were the big winner that we talked about earlier.
But interestingly, we're also seeing money flowing out of the energy sector.
Oh, interesting. Why is that?
Well, it's probably due to weaker oil prices and concerns about global energy demand.
Right, all that geopolitical instability in the Middle East.
Exactly. That's definitely adding to the uncertainty.
Okay, so tech and healthcare in, energy out.
Right.
What about the overall market sentiment? Are investors feeling bullish or bearish?
Well, if you look at the options market, it's looking pretty bullish right now.
So that means people are betting that.
Yeah, more investors are betting that the market will continue to rise.
Continue to rise, okay.
They're buying calls.
Okay.
Essentially bets that the market will go up.
Gotcha. So despite the Fed's mixed signals and some potential headwinds, the overall mood is
cautiously optimistic.
Cautiously optimistic.
I think that's a good way to put it.
Okay, now this report also highlights some global risks.
Yes.
That could derail the market.
Definitely.
What are those?
Well, investors are watching 3 major concerns.
Okay.
First, there's the ongoing crisis in China's real estate sector.
Right, that's been a big one.
The big story for a while now.
Yeah, and it could have a domino effect on the global economy.
Because China's such a major player.
A major player in the global economy.
Exactly.
Okay, so that's one.
The second is
That's the second.
The geopolitical tensions in the Middle East.
Right, that we were just talking about.
Yeah, adding to the uncertainty in energy markets.
Okay, and the third?
Third is the high level of corporate debt in the U.S.
Okay.
Which could become a problem if interest rates stay high.
Right, because then they have to.
Yeah, companies could struggle to make their debt payments.
All right, so how are investors preparing for these potential risks? Are they panicking?
No, not panicking, but definitely hedging their bets. We're seeing more investors buying VIX calls.
VIX calls, which are
basically bets that the market will become more volatile.
Okay, so they're betting that.
Yeah, preparing for a potential roller coaster ride.
A roller coaster ride.
And also we're seeing increased investment in gold and U.S. Treasury bonds, which are considered safe haven assets.
Right, because when things get a little scary,
people look for safety. Yeah.
Okay, so we've got a market that's at record highs, driven by, strong performance in tech.
Yeah.
Fueled by institutional buying. But we've also got the Fed.
Right.
Sending mixed signals, global risks on the horizon, and investors kind of cautiously hedging their bets.
It's a complex picture.
It's a very complex picture.
But a lot to digest.
So this report has given us a lot to think about as we navigate the weeks ahead.
Definitely. And remember, it's not just about knowing what's happening, it's about understanding why it matters.
Absolutely, and that's why we do these deep dives.
Exactly.
So stay tuned, we'll be back after a short break.
Yes, we'll be right back.
Welcome back. Before the break, we were talking about, how the market's at record highs, but there are these global risks.
Right. Exactly.
And I think, one thing that's important to remember is that, even if, let's say, the crisis in China's real estate sector worsens.
Yeah.
That could have a ripple effect across the global economy.
Absolutely. It's all interconnected.
Yeah. And it's like, even if the Fed decides to, cut interest rates or whatever.
Right.
It doesn't mean that that's going to, completely insulate us from those global risks.
Exactly. Those things can definitely spill over.
Yeah. So it's, it's a complex situation.
It is. There are a lot of moving parts.
So before the break, we were talking about some of those technical levels to watch.
Right. Those support and resistance levels for the S&P 500.
Yeah, and the VIX.
The VIX, yeah, that's a key one.
Which measures volatility. So can you just remind us again what those are and what we should be watching for?
Sure. So remember that the S&P 500 is facing resistance around 6,050.
Okay.
If it breaks above that level with strong volume, that's a very bullish signal.
So a high volume breakout.
Exactly.
Is what we're looking for.
Yeah, it suggests strong conviction from buyers.
On the flip side,
if it breaks below 5,950 with heavy volume, that's a bearish signal, could mean a correction is coming.
Okay, so we want to see it stay above 5,950.
Ideally, yeah.
And then the VIX.
The VIX, remember, measures market volatility.
So the higher the VIX, the more volatile.
Exactly. Right now it's around 17, which is relatively low.
Okay, so that means
relatively calm market environment. But
always a but.
Always a but. Yeah. Sometimes when the VIX is super low, it can actually be a warning sign.
Oh, really interesting.
Yeah. It could mean investors are getting complacent.
Okay, so we don't want to see it get too low.
Not too low, no.
Because that could mean that.
That could mean trouble's brewing.
Okay, yeah, that makes sense.
So, yeah, it's a good indicator to keep an eye on.
Okay, now let's shift gears a bit and talk about some of the sectors that we think could drive growth in the coming years.
Okay, sounds good.
We touched on space technology and renewable energy earlier, but let's dive a little deeper.
Let's do it.
So space technology, why are you so bullish on this sector?
Well, for one thing, the innovation happening in satellite technology and space logistics is just mind-blowing.
It's incredible, right? Like, it seems like every day there's a new breakthrough.
I know, it's amazing. And companies like SpaceX are making it cheaper and easier to access space.
Right. It's not just about government space programs anymore.
Not at all. Private companies are playing a huge role.
And this is leading to, I guess, a surge in demand for all sorts of satellite-based services.
Exactly. From providing internet access to remote areas to gathering Earth observation data, the possibilities are endless.
It's like the final frontier of investing.
It really is. And it's not just about launching rockets.
Right.
It's about using space technology to solve real-world problems here on Earth.
And that's what makes it so exciting.
Absolutely.
Okay, so space technology, definitely one to watch. Now, what about renewable energy?
Well, as we discussed before, renewable energy is being driven by global sustainability initiatives, government incentives, and the increasing demand for clean energy solutions.
Right. And it seems like those trends are only going to accelerate in the coming years.
I think so, yeah. The world is moving towards a more sustainable future.
And on top of that, the cost of renewable energy technologies has been steadily decreasing.
Exactly. So it's becoming more and more competitive with fossil fuels.
So it's good for the environment and good for the bottom line.
A win-win situation.
Definitely. Now, another sector that I think is worth mentioning is healthcare.
Oh, yeah. Healthcare is always a good one.
Yeah, it's a bit more of a defensive sector, I guess, compared to some of these other high-growth areas we've been talking about.
It is, yeah. But there's still a lot of innovation happening in healthcare,
Obviously.
driven by things like genomics, personalized medicine, and artificial intelligence.
Right, so it's not just about traditional pharmaceuticals and medical devices anymore.
No, there are all these new and exciting areas emerging.
Yeah, like gene editing and telemedicine.
Exactly.
So healthcare is definitely a sector that I think investors should have on their radar.
I agree. And as the global population ages and the demand for healthcare services rises.
Right, it's only going to become more important.
Exactly.
So we've talked about space technology, renewable energy,
I thought are
healthcare,
very promising sectors.
all very promising sectors. Now, before we wrap up, let's circle back to risk management.
Ah, yes, risk management. Can't forget about that.
It's like the broccoli of investing.
Ah, I like that.
We know it's good for us, but it's not always the most fun to think about.
True, but it's essential.
Absolutely. So what are some key things that our listeners should keep in mind when it comes to managing risk?
Well, the most important rule is never invest more than you can afford to lose.
Right. That sounds obvious, but
It is, but people forget it all the time.
they get caught up in the hype.
Exactly. And it's important to remember that investing always involves risk.
Yeah, there are no guarantees.
No guarantees, so diversifying your portfolio is crucial.
Don't put all your eggs in one basket.
Right, exactly. And when it comes to individual stocks, do your research.
Yeah. Understand the company, their financials, their growth prospects.
Don't just buy something because the price is going up or someone on social media told you to.
Right. Make informed decisions.
Always.
And don't be afraid to use stop loss orders.
Ah, yes. Stop loss orders. Those can be very helpful.
Can you just remind us what those are again?
Sure. A stop loss order is an instruction to automatically sell a stock if it falls below a certain price.
Okay. So it helps to limit your losses.
Exactly. It's not a foolproof strategy,
Right.
but it can help protect your capital.
All right. So to recap,
Hmm.
don't invest more than you can afford to lose. Diversify your portfolio. Do your research.
Yes.
And consider using stop loss orders.
Wise words.
All right. So we've covered a lot of ground today.
We have.
We've talked about market trends, technical levels, sector insights, and risk management strategies.
A lot to digest.
But hopefully our listeners are feeling more informed and empowered to navigate the markets.
That's the goal.
Exactly. And remember, this is just the beginning.
Right.
The market is constantly evolving.
It is.
So it's important to stay informed and keep learning.
Absolutely. Stay curious, do your own research, and never be afraid to ask questions.
Now let's return to that thought-provoking question we posed earlier.
Mm-hmm.
With the Fed's mixed signals and those looming global risks, what industries do you think will thrive or struggle in the coming months?
That's a tough one, but let's explore some potential scenarios.
It's fascinating to think about, how all these different industries might react to all this.
Yeah,
the different
areas
that we've laid out.
Exactly.
So let's play that what-if game
Okay.
a little bit more.
I like it.
So what if the Fed decides to stay the course and, continues reducing its balance sheet?
Okay.
Even if that increases, the risk of a recession.
Right.
What industries might actually benefit from that kind of environment?
Well, in that kind of environment where the Fed is really prioritizing fighting inflation, overstimulating growth, you typically see sectors like consumer staples.
Okay.
And utilities
Wow.
hold up pretty well.
Because people still need to buy groceries. and
Exactly.
keep
Lights
afloat.
on. People still need the essentials.
Right.
So the demand for those goods and services tends to be pretty stable,
Right.
regardless of the economic conditions.
So they're kind of considered like defensive sectors.
Exactly, yeah, defensive sectors.
Okay. So on the other hand,
Yeah,
industries that rely heavily on
right.
consumer spending,
Consumer spending, easy access to credit,
like
retail, housing, those kinds of things.
Yeah, those might face tougher times.
Exactly, yeah, because when money's tight, people cut back on those
Right.
discretionary purchases.
Okay, so that's one scenario.
Huh.
What if the Fed decides to switch gears
Okay,
and actually cut interest rates sooner than expected
right.
to try to avoid a recession?
Okay, yeah.
What happens then?
Well, if the Fed pivots to a more accommodative stance, really focused on supporting growth, that could be a big win for growth-oriented sectors like technology, healthcare.
Okay.
Those sectors tend to do really well.
Right.
When interest rates are low, investors are feeling bullish.
Right.
Because lower interest rates make it cheaper for companies to borrow money,
Makes sense.
invest in R&D, expand their operations.
Right.
And it also tends to boost stock valuations across the board.
Because investors are willing to
Pay a premium for those high growth companies.
Right, exactly.
So, yeah, that's kind of the flip side of that scenario.
Okay, so now we have to factor in those global risks that we talked about.
Right.
How might those play out in these different scenarios?
Yeah. That's where things get really interesting, right?
Yeah.
Because, if China's real estate crisis were to worsen, that could have a ripple effect across the global economy, regardless of what the Fed does.
So it's almost like it doesn't even matter.
Almost, yeah. It's a big enough event.
So it's like that butterfly effect we keep coming back to. It's
They're
like,
all interconnected.
one thing happens in one part of the world, and it can have these huge consequences.
Exactly.
So with all this uncertainty,
Yeah.
how can investors make informed decisions?
That's the million-dollar question, isn't it?
It really is.
And, I think the key is not to try and predict the future with perfect accuracy.
Right.
That's impossible.
No one can do that.
No one can do that.
Right.
But it's about understanding the range of potential outcomes.
Okay.
Recognizing that interconnectedness that we keep talking about, and then positioning your portfolio accordingly.
So it's all about managing risk.
Exactly.
And being prepared.
Being prepared for different scenarios.
For those different scenarios.
Exactly.
Yeah.
So diversification, having a well-defined investment strategy, and staying informed about global events, all of those things are crucial.
All right. So I think we've given our listeners a lot to think about today.
I hope so.
We've covered a lot of ground.
A lot of ground.
But, ultimately it's up to each individual investor to kind of
make their own decisions.
And do their own research and
exactly.
And come to their own conclusions.
And hopefully we've given them the tools and the knowledge to do that.
Yeah. That's what we try to do with these deep dives.
Absolutely.
So, thanks for joining us.
Thanks for having me.
And we'll see you next time for another deep dive.
Sounds good.